Hello financial investors, my name is Brent and welcome to the channel. Today we're going to be taking a look at the markets on Tuesday. We're also going to be jumping into taking a look at stock futures and the M1 Finance portfolio. This is going to be my first chunk being invested in the market here in 2020. We're going to be looking at the stocks that are currently in the portfolio and also going over what stocks we are buying today. We do have some cash in the account, so we're going to go ahead and cover that in today's video. So if you are brand new to the channel, have not yet subscribed, I would really like if you hit that subscribe button below, give this video a big thumbs up by hitting that button below as well, and drop a comment. Let me know what stocks you're buying. What are you doing right now with what is currently going on in the market and globally? So that is it. Let's go ahead and get started in the video. The S&P today took a bit of a dive, along with the Dow Jones and the NASDAQ. S&P down 0.28, Dow Jones 0.42, and the NASDAQ 0.03. Now, I do believe that with the after hours movements, we are actually in the negative here. We can see year to date as after today, we're up zero point 0.2, Dow Jones up 0.16, the NASDAQ up 1.07. Well, after hours, I launched some missiles this afternoon, hit a site that had some military personnel, and that really kind of hurt the market. I don't foresee this being a long-term thing. I know here, you can see here in the after hours, defensive stocks are going to become a big thing. I would look into Raytheon, General Dynamics, and Lockheed Martin. Those are the three that I am currently looking into buying more of or adding into my portfolio. I do own Lockheed Martin, but this is something that a lot of the military personnel had already knew was coming because of the way, the death of their general. They normally wait 3 days, they do their morning, and then they do their attack, their offensive. So we're kind of in a weird position right now, and I don't want to dive too much into politics and such, so we'll just kind of proceed from there. So that's what kind of took place today. The markets were red, and then we continue to bleed off a little bit, putting us down into the negative for the year for the S&P and the Dow Jones, and about a 0.5% from the NASDAQ. We may actually open in the negative tomorrow. We shall see how that plays out year to date. Now, jumping over into M1 Finance. Now we're kind of done with the global, the market, the stuff that took place here on Tuesday. Now we're going to get into M1 Finance. Now, I did add some new positions recently into M1 Finance. Here during the day, I did lose about 0.36% in comparison to the rest of the market. So I'm right there with probably about the Dow Jones, in between the Dow Jones and the S&P. So I did lose a little bit today. Not too bad. I did also got some dividends here within the last month or so. I've been getting quite a bit of dividends now starting to roll in just due to the number of shares that we have over on M1 Finance, which allows you to buy partial shares. Now, looking at, globally, you don't want to spend too much time in your head thinking about what is, of course you want to spend some time looking at what could potentially happen here in the short term. Maybe it's opportunity for you, but over the long term, it's this little date, what's happening right now in the next few days, in the next few weeks, in the next few years doesn't matter in the long-term sense of it all. So over the next 10, 20, 30 years, as you get closer to your retirement, today's date, you may not even remember today's date of when, certain specific media, was out there on the news, what took place today. So I wouldn't think of it in that short term as selling your stocks. Instead, with the market the current way that it is, it could be a really good buying opportunity. Now, I do have $123.28 here ready to be invested, so that is what we're going to be focusing on. I did add a few new positions into the portfolio. I added the Waco Group, Genuine Parts Company, Lancaster Colony, Clorox the company, McDonald's Corporation, and those were the 5, and there was UGI. So UGI Corporation, if we go quickly over what they do, McDonald's, obviously, they own a bunch of real estate. They lease their real estate for franchising, and individual business owners can buy the franchise and have a restaurant, and that's McDonald's. Clorox, they have a ton of cleaning products, most known for their bleach products and such, and they have a bunch of other, it seems like hundreds of items that they sell. We have Lancaster, major food diversified company. It actually kind of shows a little bit more here towards the bottom. They are engaged in consumer products from retail, food services, floral, some original equipment, aftermarket sectors, in glassware, candles, automotive, specialty foods. They have a ton of segments there and a ton of products out there. Really nice there as well. Also UGI, just another utilities. I have Southern Company. I forgot what the other one was, the Southern Company, and some other. This is just another utility company I felt was kind of beat up here in the short term. I wanted to go ahead and add a new position into the portfolio, so I went ahead and added UGI there as a utility. Genuine Parts, this one's a bit of a risky one, being that it's automotive wholesale. So it does have a long history of growing and paying out dividends, having 62 years. All of these are dividend aristocrats. McDonald's, 42 years. Clorox, 41 years. Lancaster, 56 years. UGI, 33 years. Genuine Parts, 62 years. Has a very nice low payout ratio at 53.97. So in the short term, I believe they were beat up. I wanted to go ahead and add into a new position over at M1 Finance, start to get that built up. I want to have a little bit more red in order to average down. And then my last one was Waco Group. This is a textile pair of footwear and accessories. This one is also a dividend aristocrat, having grown and paid out dividends for the past 37 years with a decent payout ratio of around 60%. They have a lot of brands. I'm not too familiar with many of their brands. They do have footwear in the United States, Canada, and Europe. You can see here that some of their names, see, I don't actually see some of their names. I'm not familiar with a few of them. I don't actually own any shoes or products produced by them, but they were also in the position that I felt could be a good buying opportunity. And I was going to go into the fundamentals of each one of them, but I believe that'll make this video a little bit too long. Maybe as I look at different positions in the portfolio, maybe we'll dive into that specific company that I am choosing to invest a little bit more into. So currently, these are the holdings that are showing negative. It's actually better if we go into the holdings tab here and go into the unrealized gain. So we have UGI Corporation, that was utilities. We have Genuine Parts, this is the wholesale company. Waco Group, 3M, Tanger Factory Outlet, Simon Property Group, and Altra. Look at the performance from Altra, which was down 30% just a few months ago. This one was in a terrible position a few months ago, down 30% in equity, bounced back now, just down 10%, along with 3M. 3M was also slammed down negative, I believe 20%, anywhere from 20 to 30% as well. AbbVie, you don't even see AbbVie here on the list as being negative. It was down 30, now it's positive up 2%. And it continues to pay out those dividends, very nice dividends. So this is why I want to average down into these positions. It lowers my unit cost, it increases my yield on cost, and it does allow me to just buy back more shares at a cheaper price, increasing my overall dividend income going forward from the buy date going forward, which just allows me to get paid out more dividends. So looking at these positions, now I'm looking at the cost basis. Which of these positions is negative, plus could be having some equity added in to get it to that 8 to thousand. I'm trying to keep all my positions right now about $800 to $1,000, and then as I get to a sizable amount, I'm basically creating myself an ETF, but then I'll have more options to choose and invest capital into. And as the market kind of goes forward, where we have some sways in the market where positions fall down 10, 20, 30% and offer buying opportunities, then I'll be able to add more capital into them. So right now I'm looking at 3 positions that are negative. We have Waco Group, Genuine Parts, and UGI Corporation. So those are the 3 here that we're going to be focusing on. Waco, Genuine Parts, and UGI. Let's see, just look at the cost basis here, making sure that those are basically the only red ones that are in this area down here. Okay, so I'm going to go ahead and clear out the remaining ones here. So it was Waco. I'm going to move that to the front here. And it was Genuine Parts. We're going to move Genuine Parts up to the front here. It was Lancaster. Moving Lancaster up here. And then we're going to go ahead and close these other 3. So we have Waco, Textile, Footwear and Apparel, GPC, Auto Parts, and Major Food Diversified Lancaster. Kind of looking at the 3 industries, I feel like Lancaster is a better position over auto parts and over footwear, accessories, retail. But we'll kind of see. Now, taking these positions, I will go and kind of go into why I decided to add these into my portfolio recently, and then I'll probably end up just buying all three of these, dividing the sum of capital that we have and investing it towards all three of these positions. So we'll start with one company at a time. We'll look at it at a 1 year timeline. So Waco Group, it is currently trading at $23.58. That puts it below its 200-day, its 50-day moving average. You can see here that it's very close to its support line here over the past, half year now. It's been trading at these very low lows. It's not quite, it's not trading at the 52-week low. That would be down in the maybe $22, $21 area, but it is trading at a very sizable area where if I add capital, what if it goes back up into that $30 point? And we'll go into some other financials here in a second. Genuine Parts, again, they got slammed here recently. I started to look into them, and they did do some sort of recovery here, but they are getting slammed here in the short term. This is with what's going on right now in the world and just the way that the market and money is moving in the market. So this is going to create some opportunity here, possibly in the short term. It is currently trading below the 50-day. It was for a time trading below the red one, the 50-day moving average. So that's Genuine Parts. Lancaster, it was trading not too long ago below 50-day, 200-day moving average. It did actually pop up high very quickly recently, and is now kind of trading on about mid support. It's not high, it's not low. Now, kind of looking at these over the past 10 years, I'll kind of show you the graph. Waco is obviously getting slammed here. Not a lot of growth over the past 10 years. We can see here that this is actually flat. Their percent-wise that they moved over a 10-year period is 0.36%. Genuine Parts, they're up 166%. Right now, as of 2015, they've been moving sideways. There's really no up, there's really no down. They're just kind of moving sideways. Lancaster, again, this one's a nice steady up and to the right. Yes, they had some areas here where they were trading above their 200-day and 50-day value, 200-day and 50-day moving average, but you can see that was quickly corrected. And if we were able to draw a line from one point to the other, it would actually be a better, they came back to fair value for a quick time, maybe even trading below fair value, and are now kind of in line going forward. So that's kind of, based off their average there. So that's the percent price and the 200-day, 50-day moving average. Now, looking at price and yield, the yield and price of these current companies over the past year, how are they currently trading? Well, Waco generally offers, on average, about a 3.2% starting yield. Here in the middle, I just kind of picked it out in the middle. You can see here where the price and yield have touched. That's right around that 3.2. So I would consider this about average for their yield, and about $27 average for their price for the year. They're currently trading below that average price of $27 for the year, and they are offering a 4% starting yield. Genuine Parts, they're offering a 3% starting yield, not the highest, but not the lowest. Here, the yield's trading over the price here at the middle would put them about 2.75 or about $108, somewhere $105, $108 as their average price for the past year. They're trading at 101. Lancaster, again, they have an average price right around maybe 152, 153 for the past, this area here. You can see here at the start about a year ago, they were very high, traded in the 170s. They did come down recently, even down touching below the 140s before quickly picking back up, and now about 150. So this one is not currently trading with a yield over the price, but I still feel it's a really good valuation. Now, bringing in their revenue and net income, looking at it over the past 10 years. And let's see here. Maybe we need to add free cash flow in here. That doesn't do it as well. I'm going to go ahead and do percent change over time. So over the past year, past 10 years, how has Waco's, I'm going to go ahead and bring in earnings in here as well. Earnings per share, that would be, this year. Let's look at this in the normal. estimates. I think there's a normal. Okay, here's the normal one. Normalized earnings per share. I think this is the current one. This was estimates, and that's always a little bit off. I think this was actually the correct one. So this is saying 2.14. So if we go to, what is this, Ways? If we go here, their annualized payout ratio for current time frame is about 0.96. Oh, wait. We're looking at their earnings per share, 155. Okay, 155. So that is actually a little bit, yeah, both of those numbers are off. So I'm not sure which one to look at a little bit better. What kind of, let's see, what's this one say? Okay, we'll just use the earnings per share here of 2.14, and we'll look at it over a 10-year period here. We can see that the earnings per share, there are periods, there's always going to be periods where the earnings per share dips during times of just hard times, and that's fine. Well, overall, over the past 10 years, let's go ahead and just hit percent change over the past 10 years. The revenue has increased here in the blue, up 3.4% on average, up 34% over the past 10 years. In the orange is their earnings per share, just moving up, and their their net income. Sorry, orange was net income, and red was earnings per share. So over the past 10 years, they're just slowly moving up, and it's a dividend aristocrat. I don't expect a whole lot from something so, just a giant company. Here we are, Genuine Parts, revenue in the blue, up 8.8% on average. We'll go ahead and also bump in their dividend. How has their dividend grew over the past 10 years? Here, Waco has increased their dividend, which is in the blue, about 6% on average per year over the past 10 years. And all positive numbers there, Genuine Parts. All positive numbers with their dividend increase at about 8.5% on average per year. But revenue, net income, earnings per share, just slowly moving up into the right. Lancaster, this one is earnings per share just slowly moving. They're a little bit slower, 2% on average per year. They're a food processing company. Their dividend is up roughly 13.3% on average per year, though. So, and you can see here that there's these spikes. That is because this company probably has some special payouts that they've paid, possibly here in the time. See, I don't see it on that. This one shows it. It's kind of weird. This is back in 2016, so I'm not sure. This isn't going to show me that data. Oh, here we go. I don't see anything spiking as far as here. I see everything kind of moving up just steady in the 30 to the 40s to the 50s, 65, now 70 cents per share. So it's very steady there. So those are the companies there. I didn't go into, return on invested capital. I think these weren't. So Waco, let's see, is that percent-wise? Yeah, it's still percent. So 10% return on your invested capital. Genuine Parts, 11% return on invested capital. Lancaster, about 21% return on your invested capital. So all three of those really good as far as you invest capital in these companies. Their return based on your invested capital is up over double digits, and that's really good. I'll see a lot of investors that like to go for 8%. They like to have the companies have a 8% or higher return on invested capital. This one beats the mark. If we look at their total assets, I don't know if have you more assets versus liabilities, I suppose. So if we looked at that, Waco, $270 million of assets, $64 million of liabilities. Genuine Parts, car company, total assets, $12 billion, total liabilities, $9 billion. Lancaster, $905 million versus $178 million in liabilities. So really good numbers, all positive, better in assets versus liabilities. Operating income and capital expenditures. You want to have higher operating income versus expenditures. So you want blue on top. So blue on top really nicely. Blue on top really nicely, almost 4 times there. Total long-term debt and also cash and equivalents. So this one does have, these are giant companies. So this one does have a lot of debt attached to it, but again, their free cash flow, their operating income, their total assets that they have is just, this debt is just the blue is actually their debt. So their cash and equivalents is 22.97 million versus their debt at 5.8 million. Genuine Parts. This one, car company, they probably have a lot of car parts on sale, or I'm not sure how their debt sort of blows up here, but you can see they have a lot more debt, 3.14 billion of debt versus cash of 333 million there. And then Lancaster, no debt, really good. And they have $196 million in cash and equivalents. So those are the three companies that, whoops, I'm still here, that we are going to be added into this portfolio. Waze currently pays me a whopping $1.37 per year, but we're gonna obviously be adding to that. We have GPC. These are just brand new positions, so they're not gonna have too much capital. GPC here pays me $1.09, and Lancaster pays me 68 cents. But we're gonna be buying into these. The lowest yield is 1.79 with Lancaster, and the highest yield I believe was Waze at 4.07. Yes, Waze at 4.07. So those are the three positions. So we're going to go ahead, head back into our portfolio. I'm going to go ahead and sort this by my losers with my losers up top. And we're going to go ahead and actually take the capital that we have at the top and split that into three. So 123.28 divided by 3 is 41. Excuse me, I had a hiccup there. $41.09. So I'm just going to say 4110 into a few of these. So I'm going to go ahead and select Waze, which should be up here somewhere because it should be in the negative. Okay, right here. Oh, did it go down that much? That's awesome. Waze. Look at this. Already, I got 11% discount. I've only invested $37 into this company. It's already down 11% that fast. That's really what you want to see when you're starting a position that you believe in for the long term. Yes, it's going to have some noise here in the short term, but over the long term, once that position is built up, you're looking at another 5, 10, 15 years out, and you've built yourself a nice sizable amount. That's where it's going to be, popping. Possibly. We'll always say possibly because we don't know the future. So order's been submitted. We're going to go ahead and head back. We're going to go ahead and select our other company here, which is GPC right there, and do buy sell there. And we're going to go ahead and type in 4110 and continue and confirm. And complete, and go back to our portfolio. And our final buy was Lancaster. This is showing up 0.29, but this is actually because, interesting that this is showing, oh, tomorrow's a red day. Maybe that's why. I don't know. Maybe I'm positive. I thought it was negative. Oh, this is actually showing me as positive. Either way, I'm going to be choosing it. I didn't, yeah. I guess I am positive in this position. It's not going to be increasing me by too much. So I have $41.08 there that you can see here available for orders is how much I had available. I'm just going to go ahead and hit buy and confirm my buy. So I covered it in today's video. Those are the three companies that we covered in today's video. We had covered Waco, Genuine Parts, and Lancaster. So we're going to be adding $123.28 into the market tomorrow on Wednesday. And hopefully the market continues to fall just a little bit prior to all my buys here. So looks like the S&P just looked like it came up. So we may be seeing a bit of a positive day, after the aftermath of Tuesday. What will the recovery be? And just, yeah, that's it. So that is basically all I wanted to cover in today's video. If you guys did enjoy this video, definitely hit the thumbs up button below. Subscribe to the channel if you have not yet subscribed. If you want to see some content coming out here in the future, drop me a comment. Let me know what do you want to see on the channel. I am going to be posting back at my regular schedule here, probably starting next week. I'm going to start posting on Monday, Wednesday, and Friday. I want to try and maybe actually do a live event sometime during the week, so I'm going to try and get something along that. So it'll be one of my videos during the week where I'll do some sort of a live event. Members can come in, ask questions, talk about stocks, and go from there. So that is going to be it for today's video. Thank you all for tuning in. I will see you next time. Have a great day. Bye.